Good day, dear viewers. Today is Friday, February 17, 2023, and you're tuned in to MasterChartsTrading.com market recap for the week. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. These actions is what keeps this channel going. Additionally, if you do that, this video will bubble higher in the results, and more people will be able to see this video. Stocks are basically trading sideways, and I think we'll see more of the same in the next few weeks. Gold is weaker on strong dollar. Natgas, natural gas, did not hold support and continued lower. However, Bitcoin has entered a new bull market. If you are a subscriber, then stay tuned. There will be a separate video. You can see we have quite a bit of stocks to cover. If you're not a subscriber, consider signing up by going to the link in the description. It is called, my site is called MasterChartsTrading.com, and you can sign up there. Let's get started. We're looking at S&P 500 mini futures. This is a TradingView.com interface, TradingView.com. You can see where I'm hovering, TradingView.com. You can get a free TradingView account, and then once you get a free TradingView account, you can sign up and get my indicators on my site. And the indicators I'm referring to right now are these lines, this green, blue, red, and yellow lines on this chart. What they do is they show you what's called support resistance levels. So in technical trading, we have this concept which are called support and resistance, and my indicators, what they do is they show it to you, they actually paint it for you, and it makes your life easier to trade. So looking at this chart, S&P 500 basically, I think, has very high percentage of chance that it has indeed bottomed here back in October of last year and has been rising more or less straight into recent weeks to month. The latest high was made here on 2nd of February. Notice that on 2nd of February, this S&P 500 mini futures touched this blue support resistance line but failed to close above it. I already showed this on S&P 500 ETF SPY, where you can see that we actually closed above this level at about this blue support resistance line. So when this happens, we're going to declare a new bull market for stocks or for any particular security. Now, S&P 500 ETF SPY has dividends included in this calculation. Where I'm hovering, it says ADJ. You can uncheck that, and that will remove the dividends from the equation. You can see that without the dividends, S&P 500 ETF SPY has not closed above this blue support resistance line, and thus I have a dilemma. And I already have highlighted this in the past, where is S&P 500, the index itself, has not yet technically entered the new bull market. It would do so when or if we close above the blue line, which is currently at 42.07. I'm reading it right off the chart. So a few weeks ago, actually last week here on February 10th, Friday, February 10th, I put in this ghost feed, and this is a projection. Projections are just that, they're projection. They're not going to exactly predict what's going to happen. But so far, what I thought was going to happen is we're going to see a drop into early March, followed by a bounce into late March, possibly a bounce back around mid-April, and finally a continuation higher into May. How do I know that? I don't. However, what I can do is I can project my indicators forward and you can see them on this chart currently. So the reason why I did this whole thing is because the indicators were projected to kind of curve downwards, and they're predicted to level out or bottom out here on April 20th of this year. So this is the reason why I'm doing it, is because I have in the past have seen that the way the indicators curve, the price action usually follows the same way. So will this actually happen? We'll see. However, the way things are going, there's a good chance of we're going to see just stocks going nowhere really in the next few weeks to possibly into May. This is happening for multiple reasons. If you listen to my previous videos, I think it has to do with the war in Ukraine. The war right now is kind of just poised in between, where Russia is literally throwing men into action in waves, similar to World War I, where Ukrainians are trying to defend themselves. At the same time, European allies and Americans are sending over tanks and battlefield armor for Ukrainians to counterattack eventually. So another possibility is because of the interest rates and the uncertainty about inflation, etc., etc. So many reasons. We don't really care exactly why things are happening, but my guess is we're just investors and traders are just not sure what's going to happen. So my indicators also are showing this indecision, potential pullback into as late as late April. But I think if we at least don't make a new low, I think we will continue higher from here. Last week I pointed out a weekly potential triangle formation here on a weekly trading view, a weekly chart. So what does weekly mean? Weekly just means that each candlestick is 1 week's worth of activity. It's an interval. You can see what happened. You can change the interval right here where I'm hovering. Previous week from Monday the 30th of January, and week before that, and the week after that, Monday the 6th of February. You can see that the range of this Monday the 6th of January was within the previous week. Now this is what's called an inside week pattern. Now this week we're seeing a breakdown out of this triangle pattern. So right now I guess the bears predominate, and this is another reason why I think we're going to see downward to sideways action in the near term. In addition to what I said about my indicators, if we look at purely at the chart pattern, which was a triangle consolidation, and I think we're seeing a breakdown from it right now. So you can see a lower low, but importantly, this is a close below the previous low on a weekly basis, and this is the first time this happened since December 27th, week of December 27th. You can see we're did not close below the previous closes. So this week this happened. So right now there is just not much we can do. We just need to wait things out and wait until into March, possibly April, for a resolution of this trading currently. As far as Dow Jones, not really any changes on weekly time frame. We can look on Dow Jones on weekly. Nothing really happened. You can see that we moved sideways. We moved up, we moved down, but at the end there was nothing. This is called a spinning top or a doji kind of candlestick. So not really much has happened as far as Dow Jones. Again, I'm maintaining a bullish bias. I think Dow Jones has entered a new bull market, and I think if everything continues, at least we have no new lows, then I think we will make new highs, possibly new record highs relatively soon. Nasdaq is dragging definitely. However, notice on this chart interesting pattern. So right now, so notice this red support resistance line right there on 1st of February. We saw a breakout above this red support resistance line and a move higher. Then we came down on 10th of February, last Friday, and touched it. And then the same thing happened on this Monday, the 13th of February. And then we moved higher. And once again, this Friday, today, the 17th of February, we touched this line. So far, we have a breakout on the 1st of February. And so far, we have retested it twice successfully. So this gives me hope that indeed we are going to continue higher from here, at least eventually. Looking at Russell 2000, it is stronger than Nasdaq. So Russell 2000 small caps index also has already broken out into a new uptrend, a new bull market right there on the 1st of February. And so far it's been basically trading sideways for the past couple of weeks. We can look at weekly. This is a weekly Nasdaq, not maybe this is a triangle consolidation, but Nasdaq, I mean, I would rather look at S&P. Same goes here, not really much is happening, but this is a very nice looking triangle right there with 3 inside weeks. So we got 1 week worth inside the previous week, and then this week is inside the previous week, the range. I'm talking about the range. So usually those consolidations are kind of, coiling up of stock price, and eventually once we break one way or the other, there could be a strong move. My knock on wood, will break out higher, and it's definitely possible. Looking at high yield bonds, so these were under pressure. High yield bonds are important to the health of market, as I have shown this chart in the past. In the past, we can look at this lower part here. This is JNK on weekly time frame, and down below here, this in yellow is a correlation coefficient, correlation to the S&P 500. By and large, junk debt junk debt or high yield bonds and S&P 500 have a high degree of correlation. Currently, the correlation is 0.87, meaning that in 87% of the instances, stocks and high yield bonds move together in lockstep. For the week, high yield bonds lost a little bit of ground, but this candle doesn't look particularly bad. This could be like a bottoming potential hammer-like candlestick. So maybe we're done with this pullback. What's important is high yield bonds have indeed broken out into a new uptrend. This occurred right there where I'm hovering on the 1st of February of this year, when they closed above this blue support resistance indicator line. So maybe we're done with this downward movement. Additionally, today's action is quite interesting. Notice that this is a green candlestick, but open was significantly lower than close. So what happened is the junk that gapped down in the morning, but then throughout the day it rose and actually closed above the open. So this could be a reversal. It's entirely possible that we are seeing a reversal in the junk debt. If junk debt moves higher, it's almost a guarantee that stocks will follow it higher. Switching gears, we're looking currently at dollar currency index, DXY. I'm going to take a small break. Please don't forget to hit the like button. I need a sip of water. Don't forget to hit the like button, subscribe to this channel, share the video, make a comment, and once I have a sip of water, we'll return. Thank you for making the comments. Thank you for all of your likes. Looking at the DXY dollar currency index. So dollar currency index until very recently was in an uptrend, no question about it. It topped out, I think, here in September of last year. Ever since it was more or less dropping. It began a new downtrend right there where I'm hovering on the 12th of January of this year. However, notice the way the indicators were curving up, and we can also project the indicators into the future, and you can see that the indicators are actually going to be curving up significantly higher. And the topping out right there where I'm hovering is going to happen on April 10th, 11th, right there. Notice again that the price has been following exactly this red indicator lines. In fact, I put in this ghost feed projection on January 30th, right there where I'm hovering. And it's been, more or less just following it alone. So I think we can easily see dollar kind of still move slightly higher, but overall I think dollar has turned and will continue lower from here, generally speaking. So in other words, I think dollar is now in a bear market. Why is it important? Because we trade gold. Dollar you can trade also if you trade Forex, like Euro versus US dollar or USD JPY. However, if you don't trade Forex, you can also trade gold. Gold is available at the retail level. So XAU divided by USD. If the USD, the lower part of this equation, gets bigger, it will pull this currency pair lower. This has been exactly what's happening. Dollar has been rising for the past few days, 2 weeks. Gold has been dropping. Notice big drop here from early February into now. So are we done dropping? We can also project the indicators into the future. Same thing, we're looking at April 10th, 11th as the bottom for this projection. But notice that the price has actually already been, the price today is where the projected indicator lines would be in April. So perhaps we're actually done with gold. Additionally, today's candlestick is just very much like a hammer candlestick, and those usually indicate a bottom of some sort. So I put in also this ghost feed projection into the future for gold. So far, I mean, I thought that it's gonna move slightly higher into 10th of February, but actually it dropped almost immediately. I started the projection on the 27th of January. 3 days later we dropped. So I predicted the drop. I just didn't know exactly where it's going to, at what time point is going to happen. So we're still possibly not done dropping. However, note that in the near term, the indicator line, the red line, which means for gold would mean the end of the bull market, is around 1786. However, into early April, this would go down even more to 1739. So depending on what gold will do in the next few days, the bear market actually might be kind of running away from the price action. So I think the gold has turned the corner and is now in an uptrend, and this pullback, unless we collapse from here and make a new low, and especially if we break below this red line, could become a buying opportunity with a very low risk. So if we especially would continue dropping towards this red line, maybe bottom around it, I mean, our risk at that point would be inexistent, very small, because if we buy right around the red line, let's say the price kind of continues sideways and maybe drops into April, touches this level a few times, and then bumps higher, that would be our risk is like a few percentage point. But as of right now, all of the major asset classes are indecisive. We're seeing either a consolidation of gains from recent moves. For example, for stocks, same goes for gold. Gold moved higher significantly from the lows here in October. So we're looking some sort of a consolidation, and if we don't break down, then I think we will continue significantly higher from here. The subject that everybody for some reason is interested is natural gas. So natural gas, I thought we're done with this collapse, and in fact I entered on the long side. I bought UNG right there where I'm hovering on the 9th of February. So if you're a subscriber, obviously you got the alert with a super tight stop. The stop was basically new low or new closing low. So I had the position for, let's see, 1, 2, 3, 4, 5, 6 days, and then I got out yesterday evening or two. You can also get out, could have gotten out today in the morning, because we made a new low here. Doesn't look like natural gas is done. We can look in the weekly chart of natural gas and see if we could see anything there. Natural gas, this collapse was predicted. You can see downward facing arrows or actual alerts to my subscribers. Where is this gonna go? We could look at weekly charts. These are multi-year lows. We're going back now to, Jesus, far. This is multi-year lows. I can't even find the beginning. Where is the beginning of the of this chart? So it looks like we're, according to this graph, for example, we're at all-time lows since 1991, because this graph doesn't go back. It doesn't go back far enough. So we're at multi-year lows. We're literally in uncharted territory. Apparently, nobody really cares about natural gas. This goes completely contrary to what our most loved dictator in Russia said at one point, at many points, that Europe is going to freeze, that we're going to, drive all of the gas-dependent businesses out of business, etc. So it looks like he was completely wrong, and gas actually collapsed in prices to multi-year lows, if not all-time lows. So we can look at NGAS also. This may be, so this one is actually slightly different versus the futures. This one looks like we're, according to this particular security, NGAS, we're actually approaching lows from 2000. Yeah, there could be good support there around 1.6, but we're still, that's still another how many percent away from today's prices. That's still another 30% down. Can the gas drop that much more? Yeah, absolutely. The best I can say that is it was not yet the bottom, and so I got out with a small, really tiny loss. It was like not even a percentage point. So I got out, maybe a couple of percentage points. I got in at $8.47 per share for UNG. I got out at $8.24 per share for UNG. So very small loss. It happens, but it's just, it doesn't look like it's the bottom yet. So we'll keep watching it and see where the bottom will be. If that's the bottom, you'll be the first one to know. So again, stay tuned to this channel and don't forget to hit the like button. The biggest news, I think, of this week is, of course, the cryptocurrencies. This is Bitcoin, BTC, USD. It broke out into a new uptrend, so we're looking at a new uptrend. Notice, how do I know it's a new uptrend? I don't need to know, I don't need to guess, I just need to look at my indicator line. So there is the breakout on Wednesday the 15th of February. We closed above this blue support resistance line. This means a new uptrend. So we're right now trading above it. We can project this we can project indicators into the future. I think it is quite possible that the Bitcoin will pull back a little bit towards maybe 2150, 2200 levels, and I think that will be a great place to buy Bitcoin. I'm actually already long Ethereum. I bought Ethereum when it broke out a little bit earlier. Once the trade is complete, I will show you the trade. But right now, it looks like Bitcoin is now in a new uptrend. And where is it gonna go? How high it's gonna go? You know how it is with Bitcoin. Sometimes it moves, 60% from previous. For example, here's an alert to go short in April of last year, and that was good for 61%. So can we now reverse the entire thing? Absolutely. Notice again the way the indicators acted, and this is another reason why I would urge anybody who's trading to get my indicators. Notice here back in, let's say in December of last year, the distance between the green and yellow lines was huge. It was like 2100 points. So you need to double. Then you can see they narrowed significantly to 16,000 points right there. Again, they narrowed even more to 11,000 points, and then finally now they're so crazy narrow. So this is a narrowing of a trading range. Additionally, when the trading range narrows, you can open this bigger position because your stop will be super tight. Your stop would be very close to where you entered. So this is why I like the indicators, and why I like the you can also project them into the future. You can see the actual trading range is going to be even more narrow in the very near term. It's going to be 6,000 or so, just a couple of days from today, you see. So this is the reason why I think ideal place to buy Bitcoin would be around 2,200, which currently it's at like 22,000. Currently it's at 23,600. So this is the reason. All right, again, please don't forget to hit the like button, subscribe to this channel, share this video. Once you've done it, head over to MasterChartsTrading.com, click on sign up one of the products. So I have this trading indicators. These are the indicators. You can get them for this interface, tradingview.com. The newsletter is sent out every day. I also send out a weekly members only recap. This week we can see there's going to be quite a bit of stocks we're going to cover. Lots of interesting names that I've never even heard about. Exact Sciences, Holdings, Dada, HUYA, 2U, Hello Group. You can see there's a bunch of stocks I've never heard of. Pacific Bio. Very interesting setups. Also, there's also a bunch of large cap stocks and ETFs, as well as gold related stocks. So those all those are going to be covered in the weekly video. And then of course the best deal is to sign up for both trading indicators and the newsletter. Thank you for watching. Once again, don't forget to hit the like button, subscribe to this channel, share this video, and I will talk to you next week. Bye bye.